Thank you, Mr. Chairman. I've been sitting on this committee listening to the fact that we need to reduce the tax rate to 25% on corporations, that would make them competitive worldwide. And now today we come and we hear this, and it turns out that really what you want to do is bring back this so-called trapped capital back into this country. Now, unfortunately, I've had the experience of sitting on this committee for quite some time, and I was here in 2004 when we repatriated. 843 companies repatriated $312 billion. They avoided $92 billion worth of taxes. 58 companies accounted for 70% of that. They saved $64 billion in taxes, and they laid off 600,000 workers. They paid dividends, and they bought back stock. Now, I'm trying to figure out, when you tell me that Apple and my local company, Starbucks, which we're kind of proud of in Seattle, and a few other places are doing quite well, but they got this trapped money over there, who is it that benefits from this untrapping, and what are they going to do? What benefit will there be to America? Starbucks is doing pretty good right now. Yeah, Apple's doing pretty good. All these companies are doing pretty good.
Okay. I'll start out, Ed. You can. To my mind, it's largely their shareholders. I mean, I think what most.
So it's the shareholders.
Yeah.
It's not the workers. It's not the economy of the country. It's only the shareholders. We're having a shareholder
I think it is largely
today.
The shareholders. Yes.
Okay.
Because a lot of that, there's two effects. One would be if the money comes back, it would be used to buy back stock, pay dividends in the first instance that are not being paid now. And I think that's healthy. That gets the money in circulation, and that will help the economy indirectly. The second aspect is that today, because of the trapped cash, companies have more of an incentive to buy assets that are outside the United States than to buy assets inside the United States. It has to help us.
Let me just stop you a second. Do you take into account at all those 600,000 workers who were displaced by that activity? Does that make any difference?
The workers weren't displaced by the cash coming back.
Well, why was that part of the process? Why did they lay off 600,000 people in the United States when they're bringing all that money back here and supposedly investing it here? Tell me what that kind of investment looks like, because if you don't hire workers, I don't see what the investment is. Maybe I'm not an economist, so
And I'm not here to defend the provision that basically allowed companies to bring the money back and spend money that they were going to spend anyway, and then do what they wanted to with the incremental money that they brought back. That's the way that provision worked. And so in the end, most of the money ended up benefiting shareholders, not benefiting workers. But that was the way Congress drafted the provision. It's not surprising that it worked as it was intended to work.
So you would suggest maybe that we should put in provisions that would require them to invest it in things that produce jobs in this country, would you?
No, I think you should give them discretion to do with it as they see best for the company, and that will give them a level playing field about where they use the money or whether they distribute it to their shareholders for them to invest in other ventures, which may well be in the United States.
So with our own economy, we haven't done anything about poverty in this country. Poverty is about where it was, and we've got 2 million people less working now than we did in 2007. And you don't think that anything we do in this tax structure should have anything to do with job creation?
I would not recommend having something that is targeted towards job creation. When I was on the Joint Committee staff back in the 70s, when Mr. Rangel was a junior member, we drafted a credit for hiring in 1977. That didn't work very well, and those provisions tend not to work very well. You really are better off setting up neutral rules for businessmen to make business decisions, and hopefully that kind of transparency and lack of economic distortion will lead to growth in the economy.
Mr. Claiborne?
I agree actually with a fair amount of what Paul said. Let me just, but there are a couple of important caveats. First, $100 billion a year is coming back right now. We have $100 billion a year of repatriation today. Second, the money is not trapped in the sense that it is excluded from the U.S. economy. The money is not buried in a backyard in Zug. The money is invested in U.S. banks and in U.S. government bonds, so it's at work in the U.S. economy today. Third, the U.S. multinationals that have this trapped cash have today the lowest cost of capital that they have ever had in a generation. They are not capital constrained in any way. Finally, where I do agree with Paul, is let the money come back as part of reform. Don't try to micromanage how the money is used. It will go for stock buybacks, but tax the money, not at 5%, but at a higher rate, and use the tax revenues to fund programs that are designed to address joblessness, that are designed to address poverty.